Woke up late, charts on fire, red and green like a funeral pyre. Discord screen and LFG, but my portfolio's haunting me. Spiked my coffee with regret. Last night I longed to break out bet. Now I'm broke, not broken yet. Just one more pump I won't forget. Buy high, die hodling. The 10 brain dopamine's controlling. Ride the whale, get wrecked clean. This crypto dream's a guillotine. Fake guru with 1,000 subs showed me coins in shady clubs. Promised moons, Lambos and jets. Now I'm left with JPEGs and debts. Scalped my soul in a 5-minute chart. Market dumped and it ripped my heart. But I'll reload, I'll play to win. Even if I lose it all again. Buy high, die hodling. Gas fees burn, but I keep rolling. Almost gone, greed's the king. This crypto dream's a punk rock thing. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. Liquidation, call me sweet. Whisper welcome to defeat. No stop loss, no regrets. Code and chaos, no safety nets. Satoshi's ghost in my DMs told me to ape again and again. Buy high, die hodling. Gas fees burn, but I keep rolling. If I crash, at least I tried. In this wild west of blockchain rise. I'll be trading till the lights go out. Charts are noise, but I live for the sound. One candle spike, and I'm back in town. Crypto's a fight, and I'm 10 toes down. Diamond hands with the crack in the glass. Risk it all, no brakes, full gas. But I'll reload, I play to win. Even if I lose it all again. Woke up late.
Awesome day so far today. Who we got in the chat so far? We've got Coma, of course, always here first. Alvin, how you doing? Noah, good morning, man. Crypto, gotta love these dumps. Yeah. This one was pretty, like, yeah, when we lost the valley area and we retested that area, yeah, we expected a rejection, but that was a pretty harsh reaction. Overcome, how you doing, man? DJ, what's up? Mic is off. Mic is off. Check, check. Are you sure? Just check the properties here. There we go. Oh, you are right. All right, cool. Sorry, man. I got that fixed. Yeah, I was picking up my mic. Just sometimes OBS does a reset on all your settings, and it switched my mic to my webcam here. There we go. That's fixed. Thanks, guys. Okay. But yeah, let's go through the chart and see what we got going on. So Bitcoin just rejected off of our valley area low from this 4-day range that we were in right here, right? When we broke down below, you always got to prepare for, like, your bias is set to fixed to prepare for longs. But you got to watch the valley area itself as a potential barrier. You need to see acceptance into it with the form of break of structure in order to assume that we could potentially get the rotation back up to the value area high. And the last time we were talking, I'm sorry I didn't do it live yesterday, guys. I got literally no sleep, and because of that, I got sick. But I got over it pretty quick around like late afternoon. So yeah, I'm feeling fine. But yeah, we were talking about the short last time we were on live. We were preparing for a move down. Now I got out way too soon. I still got decent gains, but it could have been obviously a lot more. So we lost momentum up here. I'll go through why I entered the short. But yeah, we had our double bottom, and we retested. We went through this chop, broke down, trending momentum. That suggested that we're going to get the move up to the value area high, and the opposite rules came true very shortly. We got to the value area high. We were hoping for a potential like take of this high or sweep of this high, but we broke from internal price action, right? We were internal from this low to this high. So everything here is internal. So it's safe to assume we're prepared that it could come back against us internally as well. So we didn't have to take the highs or lows. If we go to the 3-minute structure, it kind of tells the story a lot better. When we came down here, had our break of structure continuation. We got a bearish flip during this moment, and that kind of like started the run. Then we had a reaction here where I closed 50%, and then internally we had this momentum break, and I saw like there's no real sell pressure in the order books, so I just got out, and I could have held it a little bit longer, obviously a lot longer from where we currently are, but I just analyzed the market a little bit too much during that moment and got out too soon. Here now, what I'm preparing for like going forward is like, obviously we're starting this downtrend. We just recently hit our head off of the downtrend momentum in confluence with the local valley area low and the more macro previous 250-day valley area high, which came from like historical price action. And since we tested it as resistance and had that confirmation, once we get that lower low close, it suggests a rotation to the previous key levels, right? And our current key levels that we have to watch along the way down. I'm hoping that we come all the way down to like 250-day valley area low at 58,900 and take this low, because it would give us like a kind of dream condition setups for potential macro longs to return back up. Over 50% of the supply would be held at a loss during this moment, which is called the bottom for us, like every single cycle. So I'm seeing that kind of interest again with on-chain alignment, structural alignment, value area alignment, all coming from this moment. And if we take that low as well, we evolve market structure to the point where we have a 12-hour strong high here, right? So anything 12-hour and below would give us the posture that we need to define a market reversal, right? And that confluence would come from us also leaving this macro valley area that we were trapped in for 200 days, 250 plus days here. So that's what I'm kind of hoping for, is that rollover to sweep this low, to evolve our strong high from here to here, so that we could potentially get a front run to a break of that strong high, and then maybe even have the macro reversal triggered during that moment. There obviously is a scenario that we're likely to range here as well. Like we ranged here for 250 days in the past, so it's definitely possible for us to get caught in a range, and this could just become the potential bottom of that range, right? So if we get that full rotation down, then we could just get in here, prepare for a potential exit plan up here, in hopes for continuation structure. But if we have opposing structure like a bearish change of character, like the lower time frames at those highs, then it'd be good to take some profits. So we'll see if we get that full rotation down. we have a key level here at this 45-minute order block, right? It is also the golden pocket. So if we pull a Fibonacci retracement from the low to the high, we have our golden pocket. The ceiling of the golden pocket is right on the floor of that 45-minute order block. So coming here, we could get a bounce, but then we have to watch for opposing barriers along the way. Back up, we have the downtrending momentum, and we'll have a previous low that we'll have to watch and confluence with that could induce a continuation down. So it could be a good scalp trade, but I don't think it's going to be the trade that will lead us to a break of this high. And right now, we just grabbed all the local liquidity that we could find. If we go to the liquidation heat maps, we can see the ping pong behavior and why we had the reactions that we did. A lot of people jumped into a short super early, way too early. They saw us coming into lower time frame supply, and they just aped into a short way too soon. If I go to the 5-minute time frame, I can explain a lot better. But right here is the supply. And just tons of people jumped into the short way too soon and just got knocked out. And then any newly added liquidity from this change of character that induced liquidity from this strong low was just recently taken too. So typical New York session kind of behavior. So if you weren't reactional at these barriers, and you held too soon, you probably got knocked out. And right now as we speak, we're testing the 15-minute orb low as a form of resistance. So if we get that lower low close, then we're likely not going to have any form of reversal here and just start coming down towards our 45-minute order block. Down at 65,165 is the ceiling, and then the floor is at 64,587 is where I'd be watching where the golden pocket is. And the 618. Yeah, that's what I'm kind of looking at. So if you're not in a short, you're basically looking for structure for a reversal for a long. And if you want good confluence levels, one will start here at the 45-minute order block. Next level will be at the 250-day previous point control. The 786 is in an awkward spot below the point control. So if we do get below the point control, we tap it, you could get an initial bounce reaction, but I think the core area that we want to get to is down here at 59,900. And then we're off to the races. And I'll be looking for an inverse perpetual long in that area, using my Bitcoin as collateral to earn more Bitcoin. In hopes that it's the bottom, the absolute bottom. We'll see what happens. How are you guys doing? We have the chat. Why are you seeing everything twice? I saw a wave of people come in. Oh, you had another window open in the background. That could do it too. Yeah. Yeah. Sometimes I sound repetitive, but yeah, it's just so sometimes I'll explain things differently twice so that people get a good understanding of it, especially if there are any new people learning. You were looking for a long with that deviation. Target 69.5. Yeah. So the deviation's getting a little too far, though, from this local value area. Let's see how we behave here. But yeah, that's what we're... So we got our short play played out beautifully. Now we're just about... It's about waiting for the structure for the long. There was definitely a long opportunity today with that change of character break to the upside, but it was short-lived, which is kind of nice, having it go straight to your first barrier immediately, so there's no motion in your trade. You just take out your gains. We had some members close about 50 to 75% of their position up here. I created an account with CoinGlass because you have to do that. You have to do that now. So I can rotate to higher time frames and with you guys in the lives. But yeah, I could see that they're starting to progress towards a more of a paid platform. It's not 100% free anymore. but they still have lots of great tools. Let's look at Solana. Solana, we were looking at, well, this was Friday. Yeah, this long, from the break of this inverse head and shoulders posture to the supply up here. We consolidated against the supply. We can update this fixed range volume profile now. This is the moment where we lost this value area right here. And we came up, test it as, well, I guess this moment here, sorry, test it as resistance, got the lower low, confirmed that we're leaving that value area. And now we just tapped a 30-minute order block just a moment ago, right here. Let's start deleting some of this noise. We don't need this anymore. We already know that's all happened. So we tapped and mitigated this full 30-minute order block here. Gave us a little bit of a reaction. We have a large 15-minute below us. This demand zone that was below us that helped induce this bounce came from, let's see where, okay, we had a 8-hour order block and demand zone there. So let's see if this holds us. We have a previous value area as well in this zone of interest. It's not from this moment, it's from a historical moment. So we can zoom out. I believe it's the previous cycle. Yeah, previous cycle leg that we were ranging in that for about 106 days. When we reclaimed it and got the higher high, it told us that we're likely to come back up to all-time highs again. And now we're back here and we're trying to use this value area as a form of support, right? So we'll see if we can hold this. It's kind of a critical moment for Solana, honestly. And losing this, it could bring us down to $52. That'd just be nuts. So I'm hoping that we don't come down that low. Even taking like the wick level low is a little bit of a risk. So if we do come down that low, you'd hope that it'd be a quick reaction and not a close. Like any closes below this would give us continuation posture, and it could end up dropping Solana quite aggressively. So we can draw our downtrending momentum. Okay, this is the pace of the sellers. We have a newly formed 45-minute order block in our face here. And internally within it, just below the equilibrium point, is the VWAP. So if we come up here, we have reason to hit our head and come down a little bit more. We could pull a fib from the extreme low to the high. And suggest that we could potentially get a bounce off this golden pocket, 786 area, alongside with the confluence of that 15-minute order block. So we can delete this and focus on the present, not the past. So this would come a good confluence with Bitcoin potentially coming down to its low. You prepare for a bullish change of character, break of downtrending momentum in this zone here. And this starts at like $76.11. And the floor where the 786 is at $72.32. So you'll be looking for longs around here. Okay, that's Solana. Ethereum, how are you doing, Ethereum? Yeah, Ethereum's short played out perfectly as well. Almost how we drew it. Right, we were looking for a bearish change of character at this local value area high in confluence with losing like a psychological key level. So we have, if you look at the structure itself and how it painted, we wanted us to get up, down with a higher high, and a break of this low to give us a change of character. We got up, down the higher high as an SFP. So that in itself was a trade opportunity. SFP would be targeting this low. But if we break below the low, it tells you can hold your trade longer, right? With a bearish change of character. And then very shortly afterwards, we got acceptance back inside the value area. We struggled a little bit at the point of control with the initial bounce off of it. But then that just ended up creating it itself as a form of supply. And then we lost it, retested, and then down we go. We can adapt our fixed range volume profile pole. Even though we're now out of that value area, it's going to be helpful for us for when we return to it. So getting acceptance back inside this previous value area will act as a guide for continuations for our setups. So its value area positioning is similar to Bitcoin's, where we had that aggressive move up and we retested it as resistance, and we just confirmed it as resistance here. We can delete this green box zone. This is no longer a form of demand that we can depend on. We can delete this. Let's delete some of this noise here too. And we delete that. You have a 30-minute order block down here. We're pulling a fib from the low to the high. We're getting close to the golden pocket. The 786 aligns with the ceiling of that 30-minute order block. So I like the confluence there. But we'll see how we behave at this golden pocket. The floor of the golden pocket also has a 30-minute order block. So the floor, like at the 618, would be the area that would have the higher confluence, and not just the golden pocket ceiling itself at 618. So we send that to back. Right, and you can put your notes on here as well. So we have a 30-minute order block plus golden pocket floor. There we go. And then the ceiling, this is another 30-minute order block. That's 786. It's on the ceiling. There we go. Cool. So we can delete this noise. It helps with our focus. So here, be looking for a potential bounce reaction. It might be a little more short-lived, but you would prefer that this low to be swept right here, so we can grab the liquidity and use it as fuel to help drive us back up. We're watching for any supply barriers along the way. Now, right now, structurally, there's not much. Like, we could create a form of supply here if we had an impulse move down, right? This would act as a form of supply. They could hit our heads off this. We have to watch that along the way. Watch the VWAP, and then hope for acceptance into the value area. But I would prefer, rather than this positioning, I would prefer this positioning down here. For a long, we have better R&R. We could prepare for a downturning momentum break. Let's see what kind of structure we get. But these are the two areas I would prepare for potential long. So in terms of price, it'll be 1,879 for the ceiling of this order block. And then 1,827 for the 786 30-minute order block here too. What we got going on in the chat? You think 55K will be the bottom? Yeah, I do think that 55K will be the bottom for a few reasons. One reason being, we're at our valley area low. It would be a slight deviation below this valley area, but we've deviated below it here a few times, right? And the last time we had this, we were ranging here for like 250 days. But then we also have our supply ruling with our emission strategy suggesting that we're close to a bottom. And every single time, in every single cycle, when we reach below this green box zone, this is a representation of what the supply is currently at in terms of profit, right? And like the last time we were here, the price tag for Bitcoin, it started at like 20,000. Then we had that one more leg down that brought us down to like 16,000. And the lowest we've ever seen this chart go, by the way, is about 38%. So if we look at the local and where we're at, we did dip down to 50.311% of supply being held in a profit. And that was at the price tag of 62,800. So if we get here, 62,800, right? There has been new investors come in, obviously. But obviously, they're also coming out as we speak. So when we get to this point, this price point, below this point of control, a massive majority of holders are holding at a loss. And that's a form of state of capitulation. So if we get to a state of capitulation, we should prepare for a macro reversal at that point. It has called the bottom for us every single cycle. But again, this doesn't mean ignore your rules. It just means if you're preparing for accumulation and you're wanting to get in a position of strength, now is the time to prepare to buy for like a long-term hold. Not financial advice, of course, but that's what I'm definitely doing. And is also the legacy support. So if I were to pull like my old macro chart, this is the Bitstamp chart, allows you to see every candle that's been printed on Bitcoin since the dawn of time. You can go way far back to when Bitcoin was worth, a few dollars, right? So this chart's really, really helpful for finding some macro evidence of like patterns and stuff, right? So here we have our legacy support that's been holding us up since July 2017, right? And we are approaching that now. And this has helped us call the bottom the last time we were here. This has helped give us that. And all the on-chain rules were met the moment we had this like rounded bottom curvature here, right? So here to here has helped us call the bottom. In confluence with this momentum, we had this massive double bottom. We front ran it with an internal double bottom. We're trying to basically accomplish the same kind of thing, but here. And we could have like an ascending support ride against this like we did last time, right? Or we could consolidate here for 100 plus days, who knows, right? Or we could just be as quick as grabbing this low and breaking this neckline and giving us a double bottom return back up. But then we have to watch this, the big supply barrier, and that could potentially induce a range. One thing that we talked about too that was interesting, we also hit this momentum test comes in the confluence of this giant head and shoulders target, right? When you're getting the target of a head and shoulders, you're just grabbing your trend line from the top to the neckline. And if that momentum were to be maintained during the break, which it was, it suggests 55,188 as the technical target after the break. And we front ran that target so far by a few $1,000s. But yeah, it's pretty picture perfect. Like this is a really good like beginner friendly lesson of a head and shoulders. And we had that lesson as well in the last all-time high, peak down, right? Before rallying back up to create a new second high. And that second high this time around, if we were to compare the new pool data that we have, it would suggest that the second high would be around $160,000. So we did create a second high this time around, but this time around was only a $4,000 difference. This looks like 65K target, 69K high, sorry. So we're kind of repeating history. So I'm prepared for like this exact scenario to occur again. I don't think that it's going to lead to a bigger drop down like we saw here. I think we're more likely to see it if we were to return back down after 160K when we're stressed out on the Newpol chart again, then we likely are going to range again and then come back up. We don't know. We can't predict the future, but history is definitely repeating right now. And I think that this is the moment, this is the second chance for a lot of people that may have missed out on the move from this consolidation before we broke to the upside. And this is the next opportunity here for like a 2x hold. So that's kind of how I'm viewing the bottom. I hope that helps you out there, man. What happened to Max Maher? He seemed to have dropped off the map about 11 months ago. Yeah, and he kind of dropped off the map in March. He started a new YouTube channel, and that new YouTube channel has gotten like 18, 19 million subscribers, so he just directed all of his focus towards that. Yeah. Let me put in a like here before I forget. Oh, thanks, man. Appreciate that. But yeah, that's what I'm preparing for in macro for Bitcoin. Like, I'm really like preparing to go heavy here again. I'm not gonna break my rules like I did last time. I went way too heavy. Time before that, it went even heavier in terms of percentage weight of my capital. This time around, I'm just gonna play it a lot safer. I'm not gonna bet the farm. Yes, it changed my life, but I'm going to be doing it like by the books. I got a lot more people following me now, so I don't want, if I make a mistake, I don't want anyone making the same mistake. But yeah, on-chain evidence suggests that we're basically at the bottom here, guys. Just got to wait for the posture. Okay. Let's take out the chat. Robert asking, in your experience, what time frame have you seen work the best for rules, predictions, and making moves? I like 5 minute, but it seems 15 minute or 30 are better for predictions. That's a great question. So it really, really, really depends on your strategy. But I will tell you that most of my success comes from the 15-minute time frame. There's lots of multi-time frame confluence that comes from 15-minute candle closes. You got to think of what's happening with the larger time frame structure and the lower time frame structure and how you could use it for your advantage. But everything's kind of every time frame that's above lower time frame is like the boss of it, right? So you have to be aware of like whether the strong highs and strong lows of like the hourly, if you're gonna be trading on something like the 3 minute or the 5 minute or the 15 minute, because they become a strong high or a strong low become a barrier for your trades. But yeah, the 15 minute is great because like every third 5 minute candle will close alongside it. So the 15 minute tends to have a lot of trade participants, and every fourth hourly candle will close alongside, every fourth 15-minute candle will close alongside the hourly. So sometimes you get these multi-time frame confluences on your breaks. But the other scenarios might force you into lower time frames, like this range right here that we were in, right? This is a range that's only about 3%. So when you're trying to establish what kind of time frame you should do, you should let the range mature, right? So if the range matures, then you can kind of identify what time frame will favor you the best, right? Whether it be the 5 minute or the 3 minute. Usually the smaller percentage range, the smaller the time frame you have to use in order to establish changes of character or breaks of structure and confluence with your levels or conflicts with your rules. So it's not a small question that you're asking, but if I were to generalize things, the 15 minute is definitely my favorite for like making like longer term decisions that could lead into potential swing trades. but it's definitely a front run time frame when you're comparing it against the hourly or the 4 hour, which most swing traders use for their big macro trade setups. I hope that helps you answer the question, but yeah, 15 minutes always been my favorite. I've had some of my biggest gains in terms of scalping from the 15 minute, especially when we were in large ranges like this. Right, these ranges that last over 90 days. The 15-minute time frame is amazing. But when things are young and trying to mature, then sometimes your lower time frames are best. What I use the 90? The 90 minute is an oddity time frame. So I don't use it very often. It's just to like microanalyze the 6 hour or the 4 hour. If I see like a 90-minute SFP in confluence with like, maybe I'm looking at the 15-minute and I see that sweep, but I don't use it too often. It's on my chart, but it really doesn't need to be. Same with the 45-minute. I don't use it very often either. It's just an oddity. But the 45-minute does sometimes give you some key levels that'll help you out. Like this one did, for example. Seeing a structure on the 45-minute suggesting that there could be residual buy orders here from this order block. So that's kind of helpful. And it came with the confluence of golden pocket. So if we come down here, it's going to give it some extra weighted value for potential setup. So, and if you didn't know that the 45-minute had an order block there, you'd know that these lows are here and that there's likely liquidity resting below it. So sweeping that area would be a key area to watch anyways. What I'd recommend, if you're trying to pick a time frame, make sure you back test the performance of your strategy on that time frame. And what kind of conditions would it be weak against? What kind of conditions is it strong against? What session should be trading in? All that stuff. Or if you're still working, let's say you're working like a 9 to 5 and you're trying to get into this, then you got to make sure that you are true to yourself when you back test your strategy to find out if the windows that you're actually available to trade would work for you with that strategy too. Wayne, what's up, man? Yeah, 30-minute I find really good too, Robert, because the lower time frame structure usually tends to giving lower time frame structure more time to develop. And let's say a 30-minute closes at like a key level that you're looking at, and then you can dissect that. You can dissect it down to like the 5-minute and the 3-minute to see if there's like a bullish change of character. So let's say, for example, there's a 30-minute SFP up here, right? You can go into lower time frames and see within that SFP, was there a bearish change of character on like the 1-minute, the 3-minute that could help influence the price to go down towards my technical target? Stuff like that. So you have your confirmation in your time frame, but you could have lower time frame evidence of support backing your setup too. Bitcoin right now is testing the VWAP. It's chilling. Trying to get acceptance back inside the orb. Can mark our wick level low. Probably gonna get our head hit here. Turn it back down. If we close above this VWAP, then we might hit our head off this low time frame supply in orb ceiling. This is a higher probability based on the trend, based on the VWAP or positioning. Alex, what's up, man? If I were gay. What's up, man? if you guys want to learn about Fibonacci, like Alex is your guy. He's great at that stuff. Him and I pass notes all the time. And most of the notes that he passes towards me is about Fibonacci. Feno is saying, we tapped 2 hour supply today. Why don't you use it? Yeah. Let's pull up the 2 hour. Let's see what you're seeing. And supply. As you're talking about this guy. Right here. It was quite obvious no matter what time frame you're looking at that was a supply barrier. Especially with the value area high confluence, value area low confluence, momentum confluence. Yeah, whether or not you were able to see it, it was pretty easy to see on lower time frames too. It's just about posture, right? If you have, when you're looking for like the impulse move down, right? The consolidation or pullback, another impulse move down, and then you have your supply zone. But yeah, you could see that on lower time frames too, that would suggest supply. 2 hours is not something that I use very often because you can see it through the dissection process on the lower time frame. You love the fibs. Yeah. Any super basic, dead simple rules, maybe 3 that have a 55% chance of netting a win in each attempt that would allow an average Joe to, let's do it. We can go through that. That's pretty simple. If you're a super beginner and you have no idea what market structure is, you have no idea what, if you're just getting into the space, I'd recommend just creating a mechanical based strategy. And I could show you an example of one that we've created. Super basic, but it's only been back tested to be profitable on the hourly time frame. So if you guys are going to be taking notes on this strategy, make sure that you are aware that going into different time frames reduces your chances of winning because I have not tested it on other time frames. But here's rule number 1. Everything's mechanical, super mechanical. So you gotta listen. If you deviate away from these rules, then you deviate away from the back-tested profitability. Okay, and then you become a gambler at that point, especially if you haven't learned anything outside of these rules yet. So, first thing you want to have added to your screen is an EMA. This is 500-day EMA. This is so super macro, 500 hourly EMA. So make sure it's synced to the hourly in your time frame. Length is set to 500. This is your bias control. So when price action is below the 500 hour EMA, just tongue tying today, then you only take shorts. You only take shorts if we're below this. If we're above it, you only take longs. Right? So this is telling you what your focus is at this time. So the next thing you want to have added to your chart, and again, this is a very beginner-friendly strategy, the MFI. So it's known as the Money Flow Index. And all these indicators are free to add, by the way. So you add that. It's created by TradingView themselves, so you don't need to find any like fancy version or anything like that. You should just add that to your chart and you're set. You would have 3 levels marked. You want your 70 level marked, your 30 level marked. You use a horizontal line like this to do that marking. You can do it on your price chart, but you can also do it right on your oscillators too, guys. So if you want to set an alarm for when a rule is met, this makes it easier to set those alarms because you can have an alert go off when the MFI crosses above and below your key levels. And your alarm just comes up as soon as you click on it. crossing, done. Right? Trigger only once. And you can have a specific sound for your MFI, so you know it's your MFI causing alert and not something else that might have a heavier weighted of importance. So you can like a water drop sound would be good, right? It's nothing crazy. It's not screaming at you to come to the charts. So yeah, 70 level and 30 level. So when we're below the 30 level, that's when you're preparing for longs. When we're above the 70 level, we're preparing for shorts. And then I'll show you how these rules talk to each other in a moment. And then the final rule is very simple as well. When we have deviated below the Bollinger Band, so the Bollinger Band is the last indicator you want to have added. You do have to make some changes. You can't just stick to the default. The length is set to 50. Standard deviation, I think this is default, set to 2. And make sure it's synced to the hourly time frame. Okay? And that's also another free indicator. So this is literally built just for beginners who are on like maybe the essentials plan or a free plan who only can have 3 indicators at once. So the final, okay, so this how the rules talk to each other. You want to have price action below the Bollinger Bands and then acceptance back in it, right? While being below the 30 level in the MFI. And if you're looking for longs, you'd want to have the higher probability of winning. You would want this 50-day EMA below us. And then basically you target the Bollinger Band center moving average. That's where your target comes from. And you can see, for example, we had that happen today and we just tapped it and then we came back down. Now, if you're in this scenario, because of our positioning below the 50-day, the 500 EMA, we'd only want to focus on shorts, right? So we want to see us close above the EMA, the Bollinger Bands, and then close back in it, and then see if we were oversold on the MFI. If all 3 of those rules were met, then you jump into a short. You can literally do this in a checklist format. Here's the last time the rules were all met perfectly, right? We had a candle close back above the Bollinger Bands. We are below the 50-day EMA. We are above the 70 on the MFI. So once we have the candle close back inside, very, very important, the candle has to close back inside the Bollinger Band. So like right during this moment, and your stop loss would be the most recent high when that deviated out of the Bollinger Bands, and your technical target is the center moving average. But as you progress as a trader, you're gonna understand like how you can evolve your targets to go beyond that, right? This would have helped you call like this top before having this massive move down if you didn't stick to the targeting rules. But I'd recommend if you're brand new to trading, just stick to the targeting rules. The win rate's pretty darn high. I'd recommend you guys back testing it yourself. Don't just take everything what someone says online for granted. But yeah, that's the rules for shorts. So it's very easy to checklist format your setups. All right, so here, let's see. Another example, I believe. Yeah, so we were closed outside the Bollinger Bands. Closed back inside, stop loss above the high. You could have gotten stopped out in this scenario. And MFI rule is met, and then you target the center moving average. Now let's look for some long examples. So we'd want to be above. Oh, there's one rule that I didn't mention. Is when not to use this strategy is basically when the EMA is inside of the Bollinger Bands. Because I noticed in the back testing that it decreases the win rate. But yeah, that's pretty much it. So let's see if we can find some good, easy, long examples. probably around here. So ranging above the 500 EMA, right? We had a candle close out. Then you want to close back in, target the moving average, close out, close back in, target the moving average. Close out, close back in, target the moving average. You want to make sure the MFI rule is met every single time. That is a mechanical strategy. So it's just like a checklist format. Every single strategy in the world should be done in a checklist format where you have your rules, being below the EMA for shorts or above for longs, check, right? And then you want to see where your positioning is on the MFI. You want to be above the 70 for shorts, below the 30 for longs, check, and then positioning within the Bollinger Band. Did we close out? Then we close back in. If we did, then check. And then your targeting rule is simple. It's based on the center moving average of the Bollinger Bands. And as you progress as a trader, I'd recommend slowly deviating away from this. This is something that I built to see if I could maybe make it for a bot, right? And it's about, in the back testing, the win rate, I'm trying to remember, it was a while ago. So I built this strategy back in maybe 2022, maybe 2020. It's in the courses. It's included in everyone's membership. So we go through about 5 different trade examples in both directions, like a really beginner-friendly way. So I hope that helps you guys out. But that's, pretty basic strategy. Alex Crypto, great live today. Yeah, his lives are awesome. Okay. Yes, we got that rejection off the VWAP today so far. How's Solana doing now? Still kind of dancing around the local demand. Swept the low. Mitigate that 45-minute order block. Still dancing off that previous value area low right now. Let's see if it holds. Right now our key levels here for a break. Back up. Bitcoin, it's kind of flagging right now. We got that rejection that we kind of expected here. Kind of being held right now by lower time frame momentum. So if we lose that momentum, we'll come down and take this low likely. A close below this low will give us that continuation towards the golden pocket. And then there we can prepare for potential scalp long. But if we come down lower instead, we don't get the reversal structure that we need. I would love to have that macro condition long here. 59K. Let's take a peek at XRP, see how it's doing. XRP, we're looking at, this is a key level for a long at 126. Broke that. This was our demand that we've fully mitigated now, though. I don't know why I haven't read. There we go. We fully mitigate this zone of interest. We could pull a fixed range volume profile here from here to here. And we just tested, same picture being painted on XRP as well. Just tested this previous value area low as resistance. We had the confluence of the 30-minute order block, supply, right? So last reaching, they hit our head. Come down, we're taking this low just like Bitcoin's taking. Our next little area of interest is down here, right? We have demand here. But if we were going to try to bring it down to a stronger area of confluence, instead of just wrapping the entire zone of interest around, which you can do, you could wrap it around the 15-minute order block and take a look at Fibonacci and see if there's any confluence there as well. So we could pull a fib from, we delete this now. I'll delete this, delete this. Our broad momentum here. Okay, we can pull a fib from this low to this high. And based on our pull, we don't have very much confluence with that area when it comes to trying to get alignment with the golden pocket or the 786. The golden pocket does align with this little area of interest, but we don't have a stacking order block. So it's up to you if that's enough. Realistically, it's only becomes enough when you have the structural evidence of support anyways, right? So if we get that bullish change of character reaction off this golden pocket retracement, then we prepare for a reversal as we start to take the upper side liquidity that we start to stack here. You can verify that on CoinGlass. But yeah, down here, look for a bullish change of character. And we lead back up from here. So if I were to try to refine my area of interest, realistically, you can go right down to, I could pull this zone of interest down to the floor or the ceiling of the golden pocket, right? I'd know that at that point, we have swept liquidity from this low, right? So it would come with a liquidity grab, and we see initial bounce reaction from there, and just be targeting local supply, like internal supply on, like golden pocket moves don't usually give you huge follow-ups all the time, but the more macro the structure is that you're looking at, the more possible it is for it to give you a stronger follow-up. When you're doing it internally, you just got to look at your structural barriers, like what's your strong low, strong high, or your unclaimed high or unclaimed low that you're focusing on. So that's refined to the golden pocket. I'm going to send this to back. And we can pull this down to mitigation from this area. And there could be liquidity resting here. There we go. So we got our XRP local levels. And this one's been mitigated now. We had initial bounce reaction, but the barrier you have to watch. You got a harsh rejection off of, so you gotta be fast to react. So for our draw pathing, yeah, we're looking for a potential long here. And we can draw our turtle momentum alongside that and see how long it might take for us to get that break. Coma, if your strategy is built inside TradingView, you can use an automated backtesting system to test it. Yeah, if you have a strategy indicator, it's a combination of 3 indicators into one. So yeah, you have to make a strategy indicator, which we believe we started building. You just search up InvestiShare under the indicators section. We've got a few of them that are not really seen for the public yet, but we're working on it. The Bollinger Bands backs, yeah, we have this. It kind of tells you every time you would enter a long or short based on the rules. And you can do a quick back test on that. Based on the time frame you look at. Like the 5-minute only has like a 50% win rate. But I say only, but 50% is not bad. You could be a profitable trader with a 35% win rate or 20% win rate if the risk to reward ratio is there and the risk management's there. And you're consistent. All right, we got that break, guys, so we can expect the attack on this unclaimed low now. 65.6. See if it holds. We're bouncing at our internal golden pocket. Robert, thank you for the technicals. No problem, man. Oh, you're answering the question above. I gotcha. I felt like you knew that answer. Backtesting is so painfully tedious and time-consuming. Has no one yet built an automated solution for AI-powered solution that makes your rules? There's you can do it directly on TradingView, like Coma suggested, but there are other platforms that allow you to pick and choose your indicators, and they will basically, in the rules that you need to have occur when we reach those indicators, and that can allow you to make mechanical based strategies. But the problem with a lot of automation is teaching it risk management is the hardest part. Like where to put your stop loss, where to, like, based on your entry, based on the technical target, you have to create a filter system too. Like is from the entry conditions being met to the mechanical based exit conditions, do you have the proper R&R? And if the answer is no, that filter should make it so that the trade is not entered despite all the rules being met. And that's one of the things that a lot of traders struggle with, is like they'll finally have a trade setup and not be aware of the opposing barriers on their setup, and then enter their trade, and their overall R&R isn't great because they're forced out early, or they end up getting hit by a loss. So to teach a bot that, it's a big struggle. But there is a lot of platforms. Trader Edge is a little bit more manual. I'm trying to remember the one platform that maybe Vestinda, I think it's called. I'll give you guys something soon. I'll find something for you that you can use for that kind of automated back testing. Another Valentine's Day loan. Oh, sorry. That sucks, man. Well, when is Valentine's Day? It's the 14th. We'll be here on Friday to hang out if you want to come over onto the stream. One of the things that happens quite often on your Valentine's Day is Rose token gets bought for people. So they'll buy it as like an airdrop gift. So you can look at Rose USDT. I think I have a Valentine's Day chart actually for that kind of stuff. So Rose. Yeah, here it is. Last time I looked at it was July 18th. I got it all color coordinated. So every Valentine's Day calls a top for this asset. So we have every pink line that you're seeing was previous Valentine's Days. And like the last one that we looked at was in 2025. It ended up becoming supply to induce tops. So let's see what happens this time around. Yeah, it's not as cyclical anymore after losing this macro key level of support. I think Rose has like inflation issues, so it's basically in a forever downtrend. We'll see if people buy this up again. Leading into it. Or that Love Potion. Yeah, Love Potion too. Love Potion's a gaming token. Yeah. But yeah, I know backtesting is tedious, man, but it gives you years of experience in one sit down, right? So I know it's the dreadful part, but it's what will help you understand what works and what doesn't before you apply it with your real money, right? So I'd recommend backtesting. I backtested hundreds of double bottoms because the first thing I learned as a trader, and it's the first thing that most people learn, is formations, right? And that could lead you down a slippery slope. But yeah, the first thing I back tested was double tops, double bottoms, and I did a lot of, when I did the research on double bottoms, I found like, why aren't all these winning, right? So you find out the structure you prefer to trade off of, which I really like double bottoms, double tops, and I still really, really do. But not every double top or double bottom is equal, right? So that's when you learn about what could I add to a double bottom that could make it more powerful. And it could be valley areas, right? Understanding valley areas. When we're at a bottom of valley area, double bottoms tend to have way more follow through. Double tops have way more follow through, right? But when they're inside of an internally in the valley area, they tend to either get rejected, cause a loss, or have very weak follow through. And it's just about stacking confluences on posture. How many rules can you add on here? And you don't want to add too many rules because sometimes rules actually conflict with each other, especially when you're using multiple oscillators. If you have like 4 oscillators on your screen, one of them is telling you one thing and the other one's telling you another, but they might be conflicting indicators. They might be, so not all indicators talk to each other in a way that would actually support you. But yeah, we're starting to you're getting closer to that low. Man, is it slow today. We had that initial burst of energy and then just dwindled. It's just about sitting on our hands and waiting for us to reach those key areas. I'm going to pull up the let's see. SOPR. The SOPR kind of gives us a story of how well retail is doing in terms of profitability. And right now it's not great. But when we dip below this gray line you're seeing here, this horizontal line, it normally signifies confluence for pairing for longs. Because when that retail gets wiped out, it usually means they're used as fuel. And we're getting that strong deviation now. It did extremely well when we were at the all-time high, of course. That's a good question, man. So we got a question from Robert. How often do you let news, upcoming events, like rate cuts or political actions influence your decisions on trades? So I normally let the dust settle on news. So one thing that you'll hear me say a lot is, if you show me the charts, I'll tell you the news, right? The more you trade, the more you feel like you live in a simulation, because a lot of the news comes after the green candle or after the red candle, not before. News tends to pick up the pace or speed up the momentum of an already existing confirmation of the move, right? So if you have a bullish change of character at a value area low,
right after that green candle, the news tends to come out. And then retail gets driven into the move, and they all start jumping in based on news. Now, when you're talking about economic data, like rate cuts and stuff like that, that's a little different. That has a big impact over like the long-term picture of stuff. And like during the moment, I tend to not trade at all on the day where a rate cut might occur or a rate increase might occur, because the impact that it has over the charts just makes things go wonky and dangerous. So it's best to wait for the dust to settle and understand how the masses are feeling based on the structure, the posture of the market, and then start trading again. But if it's just talk, it doesn't usually have a big weighted impact over my trades. But if it's regulation or monetary policy, then it helps you kind of gauge the understanding of how it can impact the macro. So charts are like reading the matrix code. Yeah. And I find the more experienced people become in the community, they start seeing it that way too. And yeah, the news really just becomes the after effect after we've confirmed the confirmation that we're going to be moving up or moving down. You also got to realize that market makers pay CoinDesk for like $10,000 every time they do an entry, news that will help drive retail into decisions. So not all news can be trusted. Like they might have like analysis posts saying like Bitcoin going to like, $500,000 or Bitcoin going to $20,000. They'll give you these extreme, ridiculous targets to try to induce you to make bad decisions. And they are paid for by the market maker. It only costs $10K to put. When you're jumping in with a $40 million position, you're going to want to try to influence the market as much as you can to sway in your direction, especially if you're a market maker. There's evidence of this everywhere. Uppy is asking the question, would the 3-hour order block near the golden pocket carry more weight opposing to the 45? Yes, for sure, 100%. Any order block of a higher time frame is stronger than the order block of a lower time frame because it takes more money to induce that move. And an order block is only a 2-candle pattern, right? So if you get like a 3-hour order block, and let's say its ceiling is like lower than the 45-minute, then I would listen to the 3-hour more than the 45. I can pull it up on my screen and see what the one that you're finding here. The thing is, where's this order block? I don't see an order block here. This guy? A little bit messy. But yeah, the equilibrium point would be flush with that. But it's already been mitigated. Right? But yeah, you're right. A higher time frame order blocks have a bigger impact over the lower time frame one. Like you're not going to be betting the farm on a 1-minute order block, right? Like there's some assets that like some of us could make a 1-minute order block on. You got to bounce. Thank you very much for the info. No problem, man. Thanks for jumping on. Sorry, I was looking at the one candle. It's all good. Yeah, I just wanted to see what you were seeing. But you're right. There was definitely one forming. It just got mitigated. It's a little messy crunch price action there. Either way, you could think of it aligning with this equilibrium point of this 45-minute. And we have our golden pocket kind of flush with this low here too. So I'm expecting if we come down here that we just come through the whole thing and not just get an aggressive bounce off of this. It's slow crawling down, man. I hear some use 1-candle order blocks opposed to 2-candle. Ooh, That doesn't sound trustworthy. I don't know what that is. Never heard of a one candle order block before. With a single candles, they can tell you a story, like hammers, graveyard candles, a momentum candle close. Every candle tells you a story, but the thing is, a candle by itself is an incomplete story. You need to, if you're looking at, like, say, for example, a doji, like a doji candle is a story of indecision, right? Right? You look at this, and let's say you're looking at like a daily doji candle, and what this tells us in the lower time frame, the story is a lot more clear, right? Indecision really just means an incomplete potential confirmation of a continuation or a reversal. And for example, an order block would tell you the story of a reversal, right? But in the lower time frames, what it'll look like is something like this. Price action comes up and has came down and has closed somewhere around here, right? So if we're leading in from an uptrend, statistically, we should be going up and closing above that unclaimed high, right? And the decision would have been made if we closed above that high and gave us that order block, or this could have came in from a break and retest, and we're just lacking that confirmation too. The alternative would be something like this for a doji candle. Price action has came like down or up, doesn't matter. We came up higher, and then we just like look at something like this, right? So the incomplete confirmation of a breakdown close below this low. So the following candle will like really help gauge the story of direction based on this indecision. But the lower time frames kind of like allow you to dissect the story and tell you like, well, why are we having indecision? What did we bounce off of? Stuff like that. That's just one candle. Every candle has a different story. The hammer candle, right? Strong buyer's momentum. We came down, likely bounced off a key level like a golden pocket or a valley area low. And it'll look like this in the lower time frames, like a V-shaped recovery, right? Or maybe if this is a daily candle, lower time frames could look something like this, an inverse head and shoulders, about to break to the upside, because hammers statistically continue price action to the upside. It's 1 hour order block. Here, mitigated. Yeah. I do have a really handy order block indicator here. But yeah, it was mitigated. So you are right. There was this little doji response, impulse candle below. We came up and we tapped it, and it's gone. We had one below us. We came down, and we had a bit of a bounce reaction, but nothing notable. But here, yeah, we had our 15-minute order block marked, or hourly order block marked to help prepare for this move, but we couldn't get past the barrier. So now we're getting that potential fall through with the break of structure, and this is our next area of interest. And it might only give us a retest to the momentum, but as we get closer to this area where there's larger amounts of liquidity, that liquidity is likely going to likely acts as fuel to help drive us to the higher highs again. So I'm getting excited for price action down here. Am I missing some questions? Let me just go back to the 55 here. We're just lacking that close here, guys. If we get an SFP here, that'll be interesting. If we swept this low, it gives us a technical target of this high, and we could build a double bottom. The SFP would be a front run to that. And if we close above this neckline, we'd have acceptance back inside the orb. We get above the VWAP, and we'd have a bullish change of character. And then we start monitoring, like we were talking about at the beginning of this live, this basically being like a lower time frame supply barrier on the ceiling of the orb. So we'd have to watch that as our potential area of conflict that can bring us right back down, especially with the confluence of the downtrend momentum and the value area low being there. We definitely got clear order blocks in our face too. What do we have in the chat? We got, oh, that's the Discord. Cool, okay. Guys, we're all caught up in the chat here. Are any of you guys in a trade right now? If you guys are in a long, just you type 1. If you're in a short, type 2. Hopefully you're in a short right now. And this is internal sweep. Slow crawling our way down. And we can delete this now, right? We don't need this anymore. Beyond Capital. Short 50x. $80. So short at $80. 50x, man. So on the reaction down then, not the reaction up, obviously. If you did on the reaction up, you would have been liquidated. So yeah, you took the reaction down. Probably after a close below the VWAP. So look at the lower time frames. Or a retest to these previous lows. Yeah, that makes more sense. 5-minute aura block, retest of the previous value area low. Equilibrium. That's an equilibrium pull, I believe. Yeah, equilibrium. So not golden pocket confluence, but good job, man. So now we're at your first area of interest then for potential TPs. Hopefully that we close below this wick level. So we get to close below that wick level, then you get a target extension on your setup around 76.10. You got little baby orb blocks on our way, but lots of opposing confluence at, say, yeah, 76.15, 76.10 area. Just be cautious around there. Good job, man. Clean. It took me a second to dissect your reasoning, but yeah, this is definitely the reasoning that I would see someone jumping in on a short. It feels a little awkward not testing the VWAP. Sometimes that happens. Let's check chat. That retest. All right. Yeah, good job, man. That's perfect. You already closed 30%. Nice. You can have your... We don't have any pullback structure, but if we did, you can move your stop loss to break even if you haven't already. Really what you want to see is that close. Then any pullback structure, you're looking at this as your new little guardian for your capital right here, this low, right? So if we come down, retest that, get the lower low, then you can rotate your stop loss potentially above that newly formed internal strong high, or just move it to break even. Some people like to have one break a structure distance away so they don't get wicked out. It's good that you already closed some of your gains at your area of interest, at your first key level of interest. Good job, man. Yeah, 15-minute order block. Yeah, I saw that a little. They're order blocks, but not with much confluence, I don't believe. So you might get a little bit of a bounce from them, but nothing that should likely induce a full-on reversal. Brett, nice. 2 on the Bitcoin at or bottom. Short. Good job. All right, cool. So you guys are doing well. And type 3 in the chat if you guys are here just to learn. If you guys are learning. And if you're shy, guys, don't worry about any questions that are too like basic or anything like that, because everyone starts somewhere. I didn't really have anyone to talk to when I first started trading. Most people that I spoke to are also learning at the same time as me. From the top of the range. Nice, Brett. So you held your short then. Yeah. 3. We got a couple here to learn. Nice. What's up, Master? What's up? Let's see how. See how. Let's take a look at a few other assets here. BNB. So BNB. Where we were looking at BNB. Yeah, it looks like the last time we were looking at BNB was on this local value area, preparing for a bounce here, right? And we got that initial bounce. We got this circled, so basically it looks like I was warning about potential supply concerns here. If we got the bounce, watch out here. We only had a small initial reaction off it, but then the point of control is what really took it over. We had that bearish change of character during this moment, telling us that the trade's likely going to start coming against us. And it did pull back a bit first, but yeah, then it came down. Never took the strong high internally there. If we did get that full rotation up, this would be your next area you'd prepare for shorts. So we can update this little momentum line. You can pull this up to the point where we left this valley area and use it as resistance. So we have that slight deviation away from our local valley area, and we're right now dancing off of a previous 95-day point of control for BNB right now. Our valley area low and our wick level low is flush at the same spot at $570. So that would be a great spot to prepare for longs on BNB. So we're just looking for the SFP sweep or a bullish change of character. And then we have to watch the valley area low acting as a form of resistance along the way. We have supply here as well. And we had a slight front run to it here. We have got supply concern alongside a previous valley area high and the local valley area low. So if we come up there, we've got to watch this as a form of resistance at $614. But if you have the acceptance in the form of a break of structure like this, then we can prepare for that rotation up to the valley area high, while being mindful of the point of control along the way. That's BNB. So this is our pathing that we prepare for. We have evolving internal momentum that we can draw. So the pace of the buyers is sped up, basically. Okay, and then that's BNB. We'll save this chart. Close it. Let's go to chain link. Oh, we'll look at SUI for Alva there. We got a SUI chart. Last time we looked at it was the 4th of February. Let's see what we were looking at. So it looks like we're trying to get acceptance back inside this value area. We get a break of a key level in the lower time frames. Was it the 5 minute? Yeah, it looks like a 5 minute. If we did base our decision on the 5 minute, it could have rotated to be lower. So the short-lived trade had a bearish flip here during this moment. Failed to create that higher high and then close below the VWAP. So that opposing confluence would warn you to get out. The best opportunity wouldn't have came from here though. It would have came from either the SFP on this red candle when it closed, which would have been high risk, or lower risk when we broke this high here. So when we lost momentum, lost the VWAP and had that bearish flip off the value area low, it's a warning sign that we weren't going to get a continuation. Remember when I say that acceptance comes from a proper break of structure, this is a failure to create a higher high. That didn't work out. Let's see, let's delete this. We can update our fixed range volume profile poll. Prepare for a potential sweep here, but we got the break of structure instead. We can delete this. Delete that. Similar posture to Bitcoin. Fought against this supply. Mitigated the whole thing. And then we started coming down. I like the order flow. This is like, this kind of structure induces a lot of liquidity. You guys ever heard like the, Alex of Crypto calls it the stiletto pattern. You whip out a stiletto, picture like this. It looks a lot like this, right? Where you have that V-shaped recovery on the left-hand side and like a slow move down on the right-hand side. What they're actually called is an Adam and Eve, right? So this is an inverse version of one. They are reversal indicators. So if we have a bunch of liquidity stacked up here, we come up and take it until it starts to go cold. And if we end up using this as a form of support, then any liquidity resting up here could be used as buy-side liquidity to help drive the market back up. So SUI is kind of painting the picture that we are seeing on Bitcoin as well. We can mark our wick level low, which is way down at 78 cents. And yeah, pull a fib from the low to the high. We're at the golden pocket now, 786. We have previous point of control confluence inside of the zone of interest. So I wouldn't really expect a bounce if we were going to get one until we reach the point of control or sweep this low. So if I were to draw pathing, see, bullish change of character here, or a bullish change of character here. You want to be patient and wait for that change of character too, because this is also a form of like, if we have a close below here, these rollovers kind of show you a sign of like lack of confidence. So you'd want to make sure you're seeing that confidence come back up through a bullish change of character, and then start targeting all the liquidity that's pooled up here. You can look at the liquidation heat maps to help you with that. So pull a measurement tool from the left, you click and you drag, and you see we've been here for 6 days, right? So you'd find a 1 week long So you want to be able to encase that time. So a 1 week long liquidation heat map would help with that. So I pull up CoinGlass. I did create an account today, so I can actually zoom out further than 24 hours. That's just insane that they're making you do that now, but I get it. So symbol SUI, and then we want 1 week. And I'll show you that. See how the liquidity is all being induced above us? It's very cold below us. This is what I mean when you see that. When you see constant breaks of structure, breaks of structure, breaks of structure, leading down, we're not taking highs. We're stacking more and more liquidity above us, which acts like a big magnet to large players with a large amount of funds because they need that liquidity to exit the market without having a huge price impact. And all the liquidity that is formed from any leads back up gets taken, right? So just like what we're seeing right now on Bitcoin, it's the same kind of story. Every time we have a break of structure, it induces liquidity above the highs because that's where people calculate their risk. They'll put their liquidation levels here. They'll put their stop losses here. And we start to go cold at that point of control. So I'll be looking at that point of control for a bounce to then start coming up and take the liquidity above us. And most of the way liquidity is off that high on SUI right here. But it's all above these most recent pullback highs, induced right after a break of structure. Break of structure. And another one here. So a bunch of newly added liquidity is likely added here too. And we can use like the 24 hour to find that out a lot more clearly too. So we go to the 24 hour. It says no data, but it's lying to us. Let's refresh. And you can see right off that peak, a bunch of newly added liquidity here. So a lot of people aped in on shorts early. You can see here where all this liquidity has been taken. People thought that this was somehow the top, and they got wiped out. Probably what helped increase the momentum when people just jumped in with way too much leverage early. They got wiped out, and then these guys, the patient ones, did well. They have their liquidity still there. Now we're coming down towards the newly added liquidity from this recent bounce, which also, in my opinion, is still too early too. Unless they have that change of character, it's, in my opinion, is a little too early. Okay. Is it worth pulling the fixed range starting from last Thursday, 5th, and playing that range? Are you talking about SUI? Yeah. So you can, yes. So there's a couple of rules when it comes that I use for establishing a mature valley area, and I'm gonna talk about a lot in this stream or in this channel, where you have an impulse move down, basic structure, impulse move down, bullish change of character, then opposing change of character. Then that becomes the mature valley area. Doesn't mean you can't pull it before that. Our supply in this scenario being here, right? We front ran it on this chart. 15-minute is a little more clear area of interest here. So you can pull a fixed range volume profile to the point where of mitigated supply, like here to here. But you can't include that in your pull up there. So just from this frame, you can see that there's lots of areas where we have fast-paced moves, some key areas of interest here and here, most of the interest being above us, starting to form what's called like a P frame. A P frame looks like this, right? And it's because we have barely any interest here. It was a quick move out, and most of our consolidation occurred here. So if we look at this like that. These statistically break to the upside, especially if the weighted point of control is on the upside, which it is right now. So most of the interest is above us. So it's going to act like a magnet to help drive the price back up. So right now we have deviated below the value area. In fact, I would actually say that we're not, this is too far of a pull from here to here. You don't want to include this into your price, into your pull until we have price acceptance back in it. When we lead out, you stop your pull. Immediately stop your pull when you lead out. But when we come back, to test it, you're testing off that volume data, that this is likely going to be a volume shelf. And our 70% of the interest here, 70% of the volume interest is based on the value area low to the value area high. And it tends to act as a form of resistance when we lead out of it, so we have to watch that. And when we get the lower low, that's a confirmation that we're leaving that value area, and it could be moving back to a previous one or forming a new one. But if we get that acceptance back in, then you can include that into your pull, so long as the deviation isn't ridiculous. There's a good gauge tool you could use. Your Fibonacci retracement tool can be adjusted to help you identify like some new key levels that are external to the value area. Pulling a template up now. Right? So the best opportunities when we deviate away from a value area occur usually around the 25% to 50% level. So we kind of have that confluence now off this area of interest here. This is based on the golden pocket 786. So we have that alignment from that deviation. So we'll see if we get that break acceptance of the value area, and then we can see us rotate back up to the value area high while being mindful of this point of control. And we know there's a lot of liquidity here, and it starts to go cold above this high where this 15-minute order block is. So this is going to be a good little magnet for the price action. So lots of confluence for Sui saying that we're going to be going up, but we're just lacking structure. And because of this awkward move up that we got today, based on our 15-minute posture at least, this is like this is the area that you want to have broken. And there could be front run opportunities in lower time frames. Like we're seeing like a lower time frame like double bottom here, right? So the front run opportunity that you could see is maybe a double bottom break, close above the VWAP and confluence with that break. And then this is going to be your limitation. You're going to have to watch this like a hawk, because you might be forced out of your trade by then. But if we break past it and get that break of structure, then that tells you can hold your trade, and you can start getting a target extension to like the point of control, which is at like $1 right now. And the dollar is also a psychological level, so it makes a lot of sense for us to be stuck range bound here for a bit. So a lot of people will accumulate at $1. A lot of people would sell at $1, right? Let's see. New Guardian Earth. What's up, man? Where do you foresee the bottom of Bitcoin? Neither of those levels. We talked about this a lot already at the beginning of this stream because someone asked me questions similar to that. But a quick recap of where I expect the macro bottom to be is about 55K. At the beginning of the stream, we spoke about the confluences of the supply being in a state of capitulation below 62.8? Yeah, 62.8 when we start capitulating. We're pretty much, we're pretty close to it now. And it has called the bottom for us historically every single cycle. And the price suppression has brought us down here pretty quick. In confluence with that, we also have our legacy support right here that's held us up since July 7th. July 17th and July 2017. So we're preparing for that move again, and it helped us a shit ton in the past for a great long. So I'm really hopeful that we get the proper structure here. So we're going to be doing some things based on, like, we'll see what happens in terms of the daily posture, but it seems like it'll be a leading indicator to use something like a 12-hour time frame, right? For this 72K being our like key level that we want to have broken for the macro reversal, but down here being an opportunity for potential front runs of that break. We're still riding along this momentum that's held us down since like 90K. So we're just going to see if we get that bullish change of character down here. So I'm hopeful that we hold this legacy support. I can't say I know the future, but based on all the on-chain metrics, the Nupal chart, the supply and profit and loss chart, the SOR, the SOPR chart, and our structure, and our previous valley area, it all kind of aligns with this area right here. So I'm waiting patiently for the proper structure to define along, and I'll scream it through the rooftops. And right now, as we speak, because we tested this valley area as resistance, we're kind of on our path down there. So we're trying to find out if we build an ascending double bottom here, maybe off this point of control, or the golden pocket that's on the floor of this 45-minute order block, or if we're gonna break below that, and all we get here maybe is a certain, like, a specific bounce to test the momentum and continue down, or if our bottom's gonna be down here. The structure will tell us the story either way, but yeah, on chain suggests that we're basically there. So I'm saying a worst case scenario in my mind is 55K right now. Losing that, holy crap, that'd be like a nightmare scenario. Because then we start seeing Bitcoin capitulate at a level that it hasn't before. Because the lowest capitulation we've ever seen in terms of supply and a profit and loss is 38%, and that was like 2 cycles ago, when Bitcoin was a lot less mature than it is today. And you'll find a bunch of articles probably out there telling you targets like 40K, 25K. It's because they want you to sell. And if you want evidence of them stealing your Bitcoin, I could show you that too. Not sure to what level it can go up to now. Well, right now as I speak, locally, we get the close above the VWAP, above this neckline. We have a double bottom posture that could bring us back up to the value area low. We're kind of like dancing between this internal unclaimed high and this low. Probability suggests that we come down lower based on our current posture. But if we close above this VWAP, then that confluence of acceptance into the orb above the VWAP and getting above this neckline would drive the price right up to like 68,237. Thank you. No problem, man. I do gotta head out soon, guys. I'm gonna be changing the format of our lives a bit. To make it a little easier for me to work with you guys in the chat. I'm gonna have the chat somehow feed it onto our lives. Be overlay over top of our watch list. So I gotta do some Photoshop designs and get you guys on my screen a lot easier. So I can read your chat a lot faster too. We have Bitcoin slow today after this little whipsaw. So yeah, just a quick recap, guys. I do got to head out. I got another question, but yeah, you shoot your question while I do my recap, and then I'll answer your question, and then I got to head out, man. I just got a call from my CPA too, so I got to send him some more information. But yeah, looking at our current positioning, like I said just a moment ago, close above this neckline, getting above the VWAP, getting it back in acceptance inside this orb would lead us to at least this high, but you would be hopeful of acceptance inside this valley area. So if you don't have an opposing reaction, right, telling you to get out, then you want to see that break of structure reaction telling you to stay in, then target the valley area high while being mindful of this point of control. Price action should move a little quickly after we get past above this volume shelf, if this bullish case scenario does occur. If we instead get a close below this wick level low, right, we'll be coming down towards our next key area of interest, which is this 45-minute order block. And it's the golden pocket. The floor of it is our golden pocket from this low to this high. Let me just adjust my fib tool because I changed the format. There we go. So right here, our golden pocket ceiling is alongside the 45-minute order block floor. So coming down here, we can induce a bounce. Might not be the bounce. And I'm actually hopeful that we just keep rolling over. We don't have any confirmations of a reversal. We just keep getting breaks of structure, inducing more liquidity above us, like we have been really well so far. And then we can use that liquidity as a magnet to help drive the price up after we take the liquidity from below this low. And get that reversal, and that could be the front run to the 12-hour change of character for a break of this high. Crossing our fingers, of course. I wouldn't mind us ranging here for a long time, like we did last time for 200 and some days. But I don't want to breach the momentum on the macro here. And to breach the momentum, it can come from a break or from long-term consolidation because it's uptrending momentum from 2017. It suggests that we could get a squeeze from this downtrending momentum and this more macro momentum here for 109 days. And that's the maximum that I would like to see. There's around 100 days in this area if we don't get that initial volatile reversal reaction. Because this would come with great confluence of us leaving the valley area and starting a potential trend reversal. But yeah, 90K is going to be a big barrier. 107K is like a bigger barrier. We have to take it one step at a time. So yeah, just these local levels at first. Preparing for reversals. If anyone's just jumping in and you're wanting to see what kind of assets we went through, we did talk about SUI, we did talk about XRP, Solana, Ethereum. So you can go back and look at our levels we're watching for reversals on those. But Bitcoin's the boss. Now let's check the chat there and see if you got your question in a row. Is it safe to hold Bitcoin at 95K? I have a little bit of fear. Well, I understand. It depends on your goals, and where you're at as a trader, or if you're a trader. So 95K, if I were in your situation with the knowledge that I have, what I would be doing is selling partials at valley area highs and rebuying those exact equivalent amount of funds at valley area lows when you determine tops and bottoms through changes of character. Because you can accumulate by doing that more of the asset. So you'd sell a partial amount here, rebuy a partial amount here, for example, just based on this valley area. Right? There's going to be other scenarios, but yeah, let's say for example we're in a big valley area, you try to find a valley area, buy at the low, rebuy at the low, sell at the top, rebuy at the low, sell at the top with a partial amount, and it'll keep lowering your average more and more and more because you're essentially getting more Bitcoin for free by doing that. Or otherwise, if you're if you haven't gotten there yet as a trader, then I'd recommend just holding, because 95K, yes, it sucks being down this much. But if you're thinking of the macro, 2+ years, we'll get back up there. Like it's 95K is just above our first supply risk, but it's below our worst, our strongest. Our strongest is around 107K. If we get to 107, then, and we see a really strong reaction, then maybe I'll consider taking some off the table. Like my average is really super low, so it's easy for me to say that. So I get the emotion that comes behind like holding at a loss like that. But I hope my advice like helps you a little bit, man. And once you've given yourself the opportunity to be, if you've proven to yourself that you're a profitable trader yet, either through like back testing, then paper trading in a forward testing environment, then you could be ready to start, doing that spot strategy, the spot accumulation strategy. All right, guys. Okay. Well, I got to head out now. Have yourself an amazing day. Trade safely. I hope the information that I've given you today has helped you guys out with your setups. Reach out to me in the Discord if you need help with anything. I'm always one message away. Sometimes I am slow to reply because I get a bunch. But if you're in the server and you @message me, it's a lot safer because there's less risk of impersonators. And I prioritize the server over my DMs. You guys have a great day, and I'll see you guys tomorrow. Vaughn, I could talk about basic attention token tomorrow, man. I got a bunch of other work I got to get done very shortly. All right, guys. Thank you. Thanks for subscribing. Thanks for sharing, and I'll see you in the next one.